Oil.
Okay.
We got oil numbers coming out.
You want to talk about some volatility, man? Why not? We're trading over $70. So it's Wednesday. We're coming into 10:30 a.m. Eastern Time. We get those EIA inventory numbers every Wednesday, 10:30 a.m. Eastern Time. Let's take a look at how this market's setting up. Look at a potential volatility trade in this market ahead of that news breaking in about 5 minutes from right now. So we're going to start things off with the 11 a.m.s, all right? They line up, and we're going to look for a bullish and bearish spread, so you're kind of gaining exposure upside and downside ahead of that number. What's nice here is that the 11 a.m.s, we're going to have an option with 70.25 being our kind of pivot
that's a good
point.
one. I like it.
Yeah, we're only about 11, 12 pennies away from where the oil contract, we're looking at the September futures, are currently trading. So you got oil trading at $70.12. Here would be your bullish spread, a little bit out of the money. So this is going to be your cheap one, costing about 16 pennies. Your bearish spread, about 11 pennies in the money. You're looking at, call it 44 bucks. A little pricey for the 11 a.m.s, right? But when we see, we just went from 9 o'clock practically, 69.38 up almost $1, right? And that's ahead of the news.
Yeah, and you know what's so funny is that last week we were saying the same thing, because it was 50-something cents, but that was for the noons, and it moved like big time.
It did. Yeah. So that one has a little bit of a bearish bias, right? Because you have kind of the head start to the bearish side with you're having, let me get the right one. You have, now it's 9 cents of intrinsic value on the bearish side. But what's nice is, let's say, I'd much rather have like a little bit of maybe bullish bias, maybe have a little bit of intrinsic value on the bullish side, and the noons line up exactly like that. So you could use $70 instead of 70.25.
Okay.
So in this one, your bullish spread's going to be the more expensive one. This one, the bullish, it's costing 39. Now you're gaining the extra hour too, and that's definitely part of what you're paying for, because the oil contract's pretty volatile between 11 and 12 on Wednesdays when we get this number. And so your bullish spread's the expensive one, costing about 39. As we tick down, 37 now. Your bearish one's costing you 18, so you're getting about $55. Now, keeping in mind, though, that you're paying 55 versus 44, but the noon has the little bit of a bullish head start.
Right.
The 11 has a little bit of a bearish head start.
Right.
And then let's just see how these 230s line up in the same way. So the first set of dailies not quite going to work, 69.50. And same thing, we've just gotten so much movement already in oil that some of the spreads are a little bit skewed. But nonetheless, $44 to $55, representing about 50 cents away from where we're trading. And we got oil trading at 70.16. We're going to get those numbers in 3 minutes.
Stay right there, folks. Tommy and I come right back. Welcome back, folks. Let's go take a look at those oil numbers. So gasoline, well, let's see. Crude fell 2.06 million barrels.
Yeah.
Inventory, gasoline 1.72.
Declining as well.
Yeah.
And so Bloomberg users expecting a stockpile drop of about 1.77. I saw somewhere down in the line here, maybe a median analyst estimate of like a decline of 2 to 2.5.
Okay.
So not too surprising, but jumping over to the chart. These are 5-minute bars. Here's your reaction. We were trading at about $70.16 coming into that number, and we're pretty close. We got a spike higher up to $70.33. Nothing too dramatic. Market trying to fight through what's in that table. We can jump back to that news, and geez, we maybe just sit here for a few seconds and watch this thing fall off. Look at that acceleration, man.
Okay.
So yeah, initial spike higher to 70.33, sitting right at about $70 right now. And again, the number pretty close, and there's the full line. Yeah, so crude showing a decline of 2.05 million barrels. Median estimate was a decline of about 2.5 million barrels. Cushing crude declining 1.2. PAD 3 crude declining 1.6. Gasoline, check the out. Estimate, though, was an increase, actually, barely, but estimate looking for an increase. Came in at decline of 1.7 million.
That might have been everyone getting gasoline to try to get out of that.
That's interesting. I wonder.
Well, to get out of the hurricane's way.
You'd think that the estimate should factor that in, though, right? I mean, that's it, but it could be, for sure, in terms of what's getting. The other side of that, though, is that what happens when the economy kind of slows down in that area, and maybe they're not using the type of gas.
Oh, for sure. That's going to be in the future.
Yeah, in the future. Right, no, I would agree, in the future,
big time.
for sure.
Yeah.
So distillates showing an increase. Estimate was a little bit more than that. And let's just jump back to the market one more time before we jump away. So $70.09.
Way in there.
We'll check back in throughout the hour to see what kind of action we get.
Welcome back, folks. Dow up 173, NASDAQ down 29, S&Ps are flat, and oil. Oil is laying where we started, isn't it?
It is. A little bit of volatility after that EIA number. Checking back in one more time. We're closing in on 11 a.m. Eastern time, and we're still getting some volatility. I mean, these are 5-minute bars, and we're jumping around 20 pennies for every 5 minutes.
Right.
You know, just even this most recent one that we're just about to close out in about 14 seconds. But, you know, we're talking about 32 cents of width in that bar, so the market kind of still trying to figure out.
Right.
That's why sometimes you might like, if you're looking for volatility, depending what you want. Do you just want that action on the news? Do you want to let it play out for a little bit? If you went for the noons, you'd still have an hour in there. But nonetheless, we haven't seen the type of action that you'd really want because there was some premium priced in there.
Yes.
With the 11 a.m.s, you needed 44 cents, and that was 44 cents, I believe, away from 70.25.
Yep.
And you can see that we're
10.
almost coming in on,
Right, 5.
pretty much right where your max loss would be. Which would be that, and just to jump back in, there's your 11 a.m.s. You would have had 70.25. You have exposure up and down from that level.
Right.
But guess what? We're sitting 5 pennies away from that level, and you got 4.5 minutes till expiration. And then to recap, the noons would have been using $70 would have been our price point, and that was going to cost us about $54.
Yes.
So that's 54 cents you needed away from 70, but you'd still have the full hour. And if anybody follows the program, follows these segments, 11 a.m. till noon, we can get some action in this market occasionally.
There's no doubt. There's no doubt.
Especially with the type of action we've been getting recently, man, in this oil market. It doesn't take long. We were just at Tuesday under 68.50. Let alone we're almost $2 from that level.
It's just wild when oil moves so
You know what's
dramatically.
amazing is it's becoming like par for the course.
Yes.
Where it's not as surprising, but it should be because we're moving $1, $2, $3 some days on a
And we're
daily
talking
basis.
millions of barrels a day.
Exactly, quite a
Unreal.
market.
Stay right there, folks. We got Fast Market coming up with our man, Mr. Kevin Hinks and Tom White. Then we'll go into our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.